Morning folks, happy Sunday. Let's have a sniff around these charts and we'll get on to some of the interesting ones, including natural gas, which is a little concerning for some, but it's not all bad news. But I want to start with the Forex majors quickly and let's have a look at the dollar index. So what we said in the last video was that we would be looking to turn around underneath this rising channel line. Well, it's a sort of a channel, more of a triangle, I suppose, rising wedge almost. We retrace back to the 200 period moving average and reject it from there. Now, we've got a bearish engulfing candle at the 200 period moving average, clearly a bearish sign. But we do have this trend line above us and this order block, which has not yet been retested. So we could visit there still. Keep that in mind. However, this is a good start and the 200 MA probably holds more weight than the underside of the channel. As a result of that, we've gone long on the euro and the pound and really just bouncing off that order block as well. In this case, we've got a bullish engulfing candle on the euro, the biggest part of the dollar index, which makes up the bulk of it. So it makes sense, the single currency. So can we hold here? Can we get above the 200 again and start moving up? I think we've got a chance, bearing in mind that we may have to retest the underside of this channel on the dollar index, so I just spoke about just now. We're also long on the pound. Let's look at the 4-hour chart quickly. Once again, buying off that support level near the bottom Bollinger Band and the Fibonacci level. That's actually the 61.8%, the golden pocket Fibonacci ratio. And also this rising trend line. And like the dollar index, we didn't quite get there. So we still might have to do that. But we have broken above the short-term trend line. And on the day chart, we've got a nice bullish engulfing candle too. Actually, on closer inspection, it's a bullish engulfing week maybe. Let's have a look at the week chart. Yeah, spike high on the week down to that Fibonacci level on the pound. Looks great for a move up. Longer term, I think that the dollar is going to show further weakness, so we'll see if this carries on. Just going back to the day chart, there's that reversal at the 100 period moving average near that rising channel line, and just a nice little reversal pattern there. We're also short on the dollar yen. We've got a rising wedge, and we're trading against that resistance level. Once again, the 200 and the 100 period moving averages in confluence at this 50% Fibonacci retracement level, looking for this to move down. This is the part of the yen carry trade unwind. It's going to take months, if not years, to completely unwind, but I think we'll probably be heading back down towards the 120s, which is its normal resting place, the dollar yen. On the 4-hour chart, you can see we've broken out of that rising wedge and we've held below it. Not convincing just yet, but we're below the 20 period moving average on the 4-hour, retested it from underneath, and we're trying to move down. So I'm quite happy with the currency pairs right now. Let's go across to stocks. I want to refer you to Friday's video on stocks and stock indices, so I'll link that at the end of this one. But so far, it's looking okay. We're holding the bearish stance still on NASDAQ and S&P and NVIDIA. We've got a couple of others going on. We've got a long on Tesla. And I'm looking short the DAX a little bit later on next week, so we'll see how that goes. I don't want to spend too much time on stocks today. I've got the Swing Trading Blueprint training course live webinar this afternoon, so I'm trying to get through this, making sure that you get the updates. On gold, we've just gone short on gold right at the top here, pretty close to the top. It's a very, very tiny position, very tentative, and I think we're entering the reversal level, very overbought, number of days in a row, and probably gold needs to consolidate again. Once again, I covered this in some detail in Friday's video. Have a look at that one, linked at the end. We're also long on Bitcoin, and fantastically, we eventually broke up and held this channel breakout. There's the, what some calling a bull flag, maybe it is. That would take us up to 100,000 if it is. But look at Friday, we closed above that level for the first time since early this year, right at the beginning of the year, and we've held there. It's better seen on the 4-hour chart. Let's zoom into this one, and you can see how we have actually, for the first time since this consolidation pattern began in February this year, for the first time, we've held above 68,000 precisely, broke up through it late on Friday, and then sort of dribbled down, but only to the top of that 68,000 level and the 20 period moving average. Very bullish. The target for this technical breakout, if we hold it, and I'm not saying we will, but if we do, is around about 100,000 and potentially even 120,000. So let's see how we go on Bitcoin. We've got a healthy position on that one. We don't have any silver, sadly. That was the big winner on Friday, but we do have platinum, and we got a nice long position on platinum. Our entry price is at about 970, and we're back over $1,000 again. Hopefully this time we can hold the $1,000 breakout level and move up higher through this order block on platinum. Next target is up into the next order block at around about 1080. Well, let's start there and then perhaps up to about 1120, something like that on platinum. Nice smiley face, all looking good. Breakout, pullback, cup and handle perhaps, and a move up. Lovely stuff. Right, that's all the metals. Now going on to natural gas. Once again, I did an extensive video on this on Friday, so please have a look at that. I want to have a look at the Henry Hub on the day chart, so let's go across to that. Before we get there, this is the Henry Hub price at Black Bull, my broker. And you can see we've just pulled down a couple of interesting things here. First of all, we've broken down through this trend line, which is significant in itself, but, well, it's obviously showing short-term weakness. But we just reached the 200-period moving average, and we remain in an uptrend. People keep saying we're in a downtrend, but we're not. Look at the longer-term picture on this Black Bull chart. We'll go across the Henry Hub shortly. So there's the first low, higher low. We're still higher than that previous low, and we're getting higher highs. We didn't get a higher high on this occasion, moving into more of a triangle formation, but we're near the bottom of that triangle. In fact, if I draw a triangle in something like this, you can see what I mean. Even though we've broken down through the short-term line, there's a longer-term one underneath below us. And that looks something like this. And you can see we're being forced into this triangle. And if we reach the bottom of this triangle at around about $2, which is quite possible, it is the order block at the bottom here. It's a very key level, the separation between the dollar store and the bargain basement. So it's a really, really important level. But notice how this rising trend line meets the order block down there. And if we bounce off there and carry on moving up, you can see that will be a higher high than the previous high, which is higher than the previous one to that. And therefore, we remain in an uptrend. As long as we're above 1.87, we are technically still in an uptrend. Allow for a retest of this trend line down to $2. Maybe $2.10. I really hope we don't have to do that, because I know some of you are suffering. But this is all about position sizing and playing this market correctly. The rollover's coming up soon. Let's have a look at the Henry Hub chart. So here we have the familiar chart of the Henry Hub natural gas price, the futures at the NYMEX. A couple of interesting things. There's that triple bottom. There's the 786 fib that we bounced off. You can see we're in an uptrend. We've got a higher high than that previous triple bottom, and we're still higher than that high, which is actually at 1.9 here on the Henry Hub. Look at the level that we've just dropped into, this red line that I've got very starkly drawn on this chart at 2.25 on the Henry Hub price here. This is a super key level. It's absolutely critical. It's a previous swing high and low on many, many occasions, not just recently, but going back into the distant past. And I have a feeling that we might try and hold this weekend. The market opens in a few hours' time, about 12 hours' time actually from now. And I wouldn't be surprised if we got a little gap up. If we do gap down, we may have to get down to $2.10, down to the 78.6% fib. Remember this level here, the squiggly line, was the 786 of this move up from the bottom to the top. So if we pull down into 2.1 now, around about that level, that's the 78.6% Fibonacci of this smaller move from here to there. That's the 786. We know that this instrument likes the 78.6% Fibonacci, as many instruments do, and we're looking for a reversal at that point. However, having said that, I do think we've got a chance of holding here this weekend. Let's see how we go. I'll do an update on Monday, and perhaps we'll do a little bit later on tonight if there's anything interesting. We're also short on WTI. Once again, I'll refer you to the video on Friday. There's nothing really to add to this. We just keep on shorting these pops. My target for WTI is around about $60, and below that into the 50s, and then maybe into the very low 50s. And we're just holding onto these positions. You can see my short positions all lined up there. And we may add another short on a breakdown and a pullback to this breakout level here at about $65 on WTI. Rand pairs I'm not going to talk about now. We've talked about that in Friday as well. We're long on the VIX and TLT, both looking a bit droopy, but let's see how those go. And then going across to the softs and grains, we remain short on cocoa. It's the only one of real interest, apart from soya, which has dropped down to our previous entry level. Let's start with soya. And we dropped below the 786% Fibonacci here on soya. Maybe we can get a double bottom here down at about 960. I don't know. We'll have to see how that plays out. But we're still long on that. And we're still short on cocoa. Absolutely beautiful. We sold there and we sold there. Both of those positions in profit. These are big contracts, and it's been a pretty decent profit on this trade, I suppose. Right, now let's look at cotton. This is actually also interesting. We took a long position on cotton a couple of days ago, purely based on this breakdown, this sort of red line, swing line right in the middle, breakdown, retest from underneath, fail, break up, retest from the top, fail, and hopefully a move up. That's cotton. Have a great trading day, everyone, and I'll see you in Monday's video. If you like this sort of thing, please hit the like, subscribe, share button. And if you'd like to join the channel, there's also the join button below. It's $1 a month or something like that. Take care.
Stocks rising, markets parabolic. Bag me some cheddar, ain't no alcoholic. Charts looking sweet like a Dodgy pie. Strategies tight, made I'm one fly guy. Tickets on fire, pockets getting deep. Gravy bowl overflowing, losing no sleep. Stop loss in place, man, I'm wrapped up good.